How do the world's wealthiest actually build their fortunes? It's not luck, it's not inheritance, it's strategy, and anyone can learn it. The truth is, most of them follow a few smart investment strategies consistently. Today, we're breaking down the top 7 investments that have historically created real, lasting wealth, and how you can start using them to grow your financial future. By the end of this video, you'll understand where to put your money and why these investments outperform most others. Wealth is not just about earning a high income, it's about making your money work for you. The richest people understand that time, compounding, and smart allocation of resources are far more powerful than just working harder. Investing isn't just for billionaires, it's for anyone who wants to build financial freedom. The key is knowing which assets create real value over time, rather than chasing quick wins that disappear as fast as they come. In this video, we'll explore 7 types of investments that have built wealth for generations. We'll break down why they work, how to get started, and actionable steps you can take today. Investment 1: stocks and equity markets. One of the most powerful tools for wealth creation is the stock market. Stocks represent ownership in a company, and historically, equities have outperformed almost every other investment over the long term. Legendary investors like Warren Buffett built billions by carefully selecting stocks and holding them for decades. The key is patience, consistency, and research. Even index funds, which track the broader market, have produced extraordinary returns over time. Start investing early, even with small amounts. The earlier you invest, the more compounding works in your favor. Consider diversifying across industries and geographies to minimize risk. Investment 2: real estate. Real estate is another classic wealth-building vehicle. Owning property, whether residential, commercial, or rental, creates multiple income streams: appreciation, rental income, and tax advantages. Real estate allows leverage, using borrowed money to increase potential returns. Billionaires like Donald Bren, Sam Zell, and Robert Kiyosaki have built fortunes by strategically acquiring and managing properties. To start, consider rental properties, REITs, real estate investment trusts, or flipping homes. Focus on areas with growth potential and cash flow to maximize returns. Real estate builds tangible wealth over time. Investment 3: businesses and entrepreneurship. Owning a business is one of the fastest ways to create substantial wealth. Unlike a job, where income is capped, a business allows you to scale, leverage systems, and generate multiple streams of revenue. Entrepreneurs like Jeff Bezos, Elon Musk, and Sarah Blakely built their fortunes by solving problems and creating value for millions of people. The key is identifying opportunities, executing well, and reinvesting profits. Even small ventures like a side hustle, online business, or local service can grow into significant wealth if managed correctly. Entrepreneurship isn't just about money, it's about control, leverage, and scalability. Investment 4: index funds and ETFs. While individual stock picking can be lucrative, it's risky and time-consuming. Index funds and ETFs, exchange-traded funds, provide a diversified, hands-off way to grow wealth consistently. These funds track the performance of entire markets or sectors, reducing the risk of individual company failures. Legendary investors often recommend low-cost index funds as a foundation for long-term wealth. Start by allocating a portion of your portfolio to index funds. Automate monthly contributions to take advantage of dollar-cost averaging, allowing your investments to grow steadily over decades. If you're learning from this so far, make sure you subscribe, because the next investments are what the wealthy use to protect and multiply their fortune. Investment 5: bonds and fixed income securities. Bonds might not produce the explosive returns of stocks, but they provide stability, predictable income, and portfolio diversification. Wealthy investors use bonds to protect capital while generating consistent interest. Government bonds, corporate bonds, and municipal bonds offer varying levels of risk and return. While they may not make you rich overnight, they preserve wealth during market volatility and provide peace of mind. For beginners, start with a mix of government and high-quality corporate bonds, balancing risk and stability within your portfolio. Investment 6: alternative assets. Alternative investments like private equity, hedge funds, commodities, or collectibles offer opportunities outside traditional markets. Many billionaires use these to diversify wealth and access higher returns. Gold, for example, has preserved wealth for centuries, while commodities like oil, silver, and agricultural products can hedge against inflation. Collectibles, art, rare coins, or vintage cars can also appreciate over time if chosen wisely. While alternatives may be complex and require research, they can be powerful wealth-building tools for those willing to learn. Start by educating yourself and gradually allocating a small portion of your portfolio to alternatives. Investment 7. Intellectual property and digital assets. In the modern economy, wealth isn't just physical, it's intellectual. Creating digital products, apps, books, online courses, or patents can generate recurring income and scale without traditional limitations. Billionaires like Mark Zuckerberg, Elon Musk, and Jeff Bezos have built empires by creating intellectual assets that solve problems and attract millions of users. Even on a smaller scale, digital assets can provide passive income streams that compound over time. Start by identifying a skill, knowledge, or idea you can package and monetize. Focus on scalability, automation, and reach to maximize returns. Intellectual property allows you to earn without directly trading time for money. Investment 8. Cryptocurrency and digital assets. While relatively new and volatile, cryptocurrencies and digital assets have created significant wealth for early adopters. Bitcoin, Ethereum, and other digital currencies offer opportunities for high returns, diversification, and exposure to emerging financial technologies. The key is to approach crypto, strategically research projects carefully, understand the technology, and only allocate a portion of your portfolio that you can afford to risk. Many wealthy investors view digital assets as a long-term growth tool rather than a get-rich-quick scheme. Start by educating yourself about blockchain technology and the most established cryptocurrencies. Consider dollar-cost averaging to mitigate volatility, and treat this investment as part of a diversified portfolio. But here's the real secret. It's not about one investment. It's how the rich combine them to make money work 24/7. Principle: diversification and long-term thinking. While these 7 investments can individually build wealth, combining them strategically amplifies results. The wealthy rarely rely on a single investment. They diversify across stocks, real estate, businesses, bonds, and alternative assets to protect and grow their capital. Diversification reduces risk, ensures steady growth, and creates multiple streams of income. Long-term thinking is critical. Compounding, reinvestment, and patience are the underlying principles behind every fortune. Focus on a balanced portfolio, continually educate yourself, and avoid chasing quick wins. Real wealth is built over time, not overnight. Actionable steps to get started today: set clear financial goals, define what wealth means to you, and create specific targets for short-term and long-term growth. Start investing early, open brokerage accounts, explore real estate, or start a side business. Small investments compound significantly over time. Automate savings and investments, remove reliance on willpower, set up automatic transfers to your investment accounts. Educate yourself, learn about each investment type, read books, follow market trends, and seek mentors who've built wealth successfully. Diversify your portfolio. Spread investments across multiple assets to reduce risk and increase growth potential. Reinvest returns. Don't spend profits immediately. Reinvesting allows compounding to work its magic. Monitor and adjust. Track performance, stay informed, and adjust your strategy as markets and opportunities evolve. Common mistakes to avoid: chasing hot investments. Quick trends may fail. Focus on proven strategies with long-term potential. Neglecting diversification, putting all your eggs in one basket, increases risk. Delayed action, waiting for perfect timing, slows wealth growth. Start small, learn, and scale. Ignoring risk management. Balance high-return investments with stable, low-risk assets. Lifestyle inflation. Don't let income increases lead to excessive spending. Reinvest in wealth-building assets instead. Mindset of wealthy investors. The rich think differently about money and investments. Patience over impulse. Wealth grows slowly and steadily. They resist instant gratification. Value creation. Investments are chosen for the value they produce, not just hype. Learning and adaptation. Constantly seek knowledge, adapt to market changes, and innovate. Calculated risk. Fear doesn't dictate decisions. Analysis and strategy do. Long-term thinking. They focus on decades, not months, letting compounding work. Adopting these principles ensures that your investments align with sustainable wealth building rather than temporary gains. The 7 investments we covered, stocks, real estate, businesses, index funds, bonds, alternative assets, and intellectual property are not just theories. They've been proven over generations to build real, lasting wealth. The key is to start early, diversify, educate yourself, and think long-term. Wealth isn't about luck. It's about consistent, smart decisions compounded over time. Join the Wealth Nexus community, where smart investors learn to build real wealth through proven strategies. Subscribe, stay consistent, and welcome to the Nexus.